Good morning, Stocktwits Nation. It is Tuesday, June 24th. I hope you enjoyed today's version of the dance video.
Yeah, that was impressive. I didn't know I
Jake,
could
you
do
were
that.
looking svelte. I don't know what you've been
Yeah.
doing, hitting the elliptical, but
Yeah, I'm not sure. AI is an amazing thing.
it really is. I would never wear that outfit. But Shy, I just noticed you do this weird thing with your hands too, where you like flip it around like MJ or something.
No, I mean, I love those videos. It makes me laugh every time. It's a good way to start it. Whoever made the executive decision to start doing that, bravo.
Yeah,
I love those
more of
videos.
this. Some high kicks next time.
Oh yeah.
I'm Katy Perry. You didn't know, here every day, but I'm Katy Perry. I'm here with Shay Boloor, and our old friend is back, Jake Wu.
What's
Welcome,
up?
Jake. What's going on?
Not
Uh,
much. Thank you for having me as always.
we love to have you. I spotted something you posted on X, and it was so true. But you were basically saying like it's impossible to react to some of the news going on because you don't know what's an official source and what's not.
Yeah.
Um, is this like a new phenomenon as a trader where you're kind of like,
Mm,
who's the authority here?
well, kind of. I think honestly, I mean, it's the posts, but it's also like the AI has, and this is something that Elon said long ago, and I never really understood. He's like, AI is potentially the most dangerous, thing that could happen. And I was like, what does that even mean? And with this war, and even with Ukraine and Russia, yeah, when that war started, you had these videos coming out that can trigger people that weren't even real. They were,
Mhm.
they were completely AI. And not only, and I posted something about that a week ago, and someone's like, oh yeah, well, who's died from it? I'm like, well, probably
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 someone.
someone. And
Yeah.
two, especially if you're posting stuff like that and you have a big enough account that can move a market, or even if it's just someone in general who isn't really in finance but they are followed by the world, that could easily just mess up. Yeah, that could totally mess up the financial market for XYZ time. It just creates this weird kind of, I don't even know, just uncertainty about like what is even real anymore. I posted something to my subscribers yesterday, like, I don't really follow CNBC, but that's probably the main thing that I'm focusing on right now is CNBC, because I don't really, I sometimes will listen to them a lot during the tariff stuff, because
Yeah.
like I said in the post, I can't really tell what's real and what's not without some type of like authenticator per post.
Yeah.
um and so it would really be nice if X could come out with some type of authentication, like badge or something for a post that is completely verified. But the community notes, that just doesn't really cut it for me.
Yeah.
So yeah, no, it's been on top of just everything going on, it's been tough to really dissect what's real and what's not, and what's confirmed, what's not, and all that.
Yeah, make an interesting point about the business news because I feel like they're less in the business of being first to like a political headline. So they're waiting for more verification than maybe a cable or someone else would be because they're not necessarily in the business of breaking political, geopolitical news. They're in the business of business news and they want to make sure it's buttoned up. So it's like almost like, yeah, you could chase the headlines. Um, or you can kind of wait and see. And Shy and I were talking yesterday about like this idea of money flowing through X. And I want to ask you the question I asked Shy and I
Yeah,
guess Michael. How do you feel about potentially the ability to trade on
sounds
X?
horrible. Yeah, no, I mean, uh I appreciate X because I'm able to host my subscription on there, but as far as money goes with X, they have a lot of things to button up on, basic things around content creator, back end, just dashboards. I still can't even get a basic metric on a lot of my stuff around my subscription, so I'm not sure how they're
Really?
going to go from there to dealing with money. Yeah. I
Mm,
mean, they have a great dashboard for public analytics, like the posts. I mean,
yeah.
so
Advertising platform is pretty good. The dashboard. You'd think they
yeah.
just replicate that for creators.
No, there's like nothing. So like I
Interesting.
said, I mean, my public analytics is great. I get a ton of metrics, but for whatever reason, the creator dashboard just is on almost non-existent. So I would hope they would fix that before they start jumping into like raw money flowing through different people and brokerages, and that sounds like there could be some issues, but
Yeah, could
who
be a ways
knows?
out.
Yeah.
Well, we ended the show yesterday. We ran out of time yesterday, but we were just getting into the Tesla Robotaxi news. And then I saw Waymo was and Uber making some moves in Atlanta. Can you recap for us what went on with the Robotaxi rollout in Austin? There was news it was going to be delayed, then it happened. What can you tell us about that?
Yeah, so this was part of our Futurum Daily Signal yesterday. I got sent to subscribers. We were talking about what the Robotaxi event means and what comes next. Yesterday, you saw Tesla was just showing the most relative strength among a lot of names out there. And even when we experienced that intraday sell-off yesterday, I forgot on what news, something probably geopolitical that ended up just being a nothing burger. It held its gains. So I think it was going through somewhat of a re-rating. And the reason for that is autonomy was always a sci-fi dream a bit on Tesla. And over the weekend, that first domino officially cemented them into autonomy as a reality. And it's catching a major bid because I think a lot of people, for how disruptive Elon's autonomy vision is, people thought there's no way it's going to be true. There's just no way because it's going to flip that whole industry upside down. I think it's going to be for example, the reason it's going to flip the industry upside down is gross margins per vehicle is a great example. It's not going to be capped at a one-time sale anymore. It's going to compound over time. Your car can start becoming an actual asset for you, creating ROI. It could become a revenue generating node. I also think that if this scales and becomes an compounds over time, like it's also going to mean less reliability on car deliveries. It's going to be more leverage for Tesla on their fleet density, and it's going to create a structurally more advantage business model for Tesla to get towards those software margins, not the traditional auto margins, which is always in the low teens at best. And it can start trending towards 50% plus over time. So it was a really positive signal, even though it was a very tight geofenced area. It was somewhat I call it a ballet because it was very orchestrated and very delicate. But I think it was just still super disruptive because they're the only company out there that's going to be owning the end-to-end in the AV space software. Honestly, like more than just software hardware, like they're owning the content. You saw there's Apple Music, Netflix in the car. So like there's a ton of interesting angles that they're offering that Waymo can't. Like it's 1/7 of the price of a Waymo car, for example. I do want to caution though, it's not going to be a vacuum of a re-rating all of a sudden. Autonomy doesn't scale like software does. It scales like infrastructure. If you know how infrastructure scales, it's complex and there's going to be red tape bureaucracy because every single city is going to create this new regulatory friction, legal complexity, or some kind of overhead issue that Austin didn't need, but LA needs, for example. So what worked in Austin over the weekend won't replicate linearly across all the other cities, for example. So that's how infrastructure scales and it takes time. So a 10% move I think it was justified yesterday because Tesla does deserve some kind of repricing from that success of that first domino falling. But I don't think it's going to be like all of a sudden it's a $2 trillion company in the next like couple weeks or 2 months. Like it's going to be a slow process, but the market's a forward-looking mechanism. Who knows how forward-looking it is? Maybe this reality turns into it's going to turn to 15 cities, 30 cities, 50 cities in next year. And if that's the case, there's real momentum here, and it's going to be explosive. But I wouldn't add here. It's more of a validation story. See how it scales up, and as soon as we get like dozens of cities adopting it, that's when like okay, it's snowballing a bit now.
Yeah, that was interesting how they rolled it out to a small group of influencers and retail investors. Are you annoyed, Shay, that you were not invited to this event as a top creator on X?
I think I'm a little too even keeled on my takes on Tesla to probably be invited. But yeah, I would like to see it for
I
sure.
think
But
it's a cool concept. They always do marketing a little bit differently.
incredible marketing.
Yeah, and we've talked about like going direct to the retail investors. Robinhood's doing a good job with that. Jake, I want to kick it over to you on the technical side. If you're seeing anything interesting in the Tesla charts outside of kind of what Shay laid out in the long-term vision.
Yeah, it's funny. I was just putting a chart together as he was talking. Yeah, I mean, Tesla is definitely in this huge consolidation pattern pretty much for the last, while. So from my perspective, if you're looking at, there we go. Let me put this down here. If you're looking at just a basic monthly chart, you've been consolidating now for literally like years. So, this consolidation is occurring after an uptrend, after a really strong move from COVID, and that's when we really had the meat of that move. So I mean, we have this kind of technical basics ascending triangle here on the monthly candle chart. You can look at a setup, ascending triangle, falling wedge, descending triangle, all of these things. They're like holding a specific hand in poker, right? They have a probability. They have statistical chance of either over time they've either been bullish or bearish. Ascending triangles are generally statistically bullish, so that means simply that they're breaking out more than they're breaking to the upside more than they're breaking down. For those that continue to not realize probabilities mean not guaranteed, there's some people out there that just are like, ascending triangle, we're going higher. Yeah, that's not the case. But if we were to look at just where we are in the ascending triangle, it's getting kind of near that apex. The statistics would say this is likely going to break to the upside and probably higher. I'm actually considering starting a position in Tesla if it does break out here. And then kind of just sell covered calls on it until I get called on it at some point. The Tesla has some really solid premiums, so the premiums are relatively expensive, so you can make some pretty good money selling covered calls, and you just sell far out of the money calls, and I'll probably do it for every like 2 months or 1 month, depending on what the premiums are. But yeah, this is definitely one I'm interested in as kind of a investment if we break out, and also just like an income strategy to just make money selling covered calls.
Interesting. I want to turn to another headline that we were talking about yesterday was big in the news and has the kind of a dual-sided fundamental technical story, and that's what went down with Novo Nordisk, HIMS. A lot of drama. Andrew, the CEO of HIMS, went on Twitter yesterday and basically said NVO is misleading people with their statement. The stock dropped 34% on the day. It's bouncing up a little bit in the pre-market. Shay, I know we talked about this a little yesterday, but I know telehealth's not your thing. HIMS is just one of those stocks that's super volatile. But I think telehealth is getting a lot of attention from retail investors between them and Oscar.
Yeah, I mean, that was pretty explosive statement from Novo Nordisk, like yesterday, especially after announcing a partnership just a month or two ago that they just did this. There's a lot of tin hat theories on why that is. All I can say is with conviction that this is a narrative fracture. I do think this is one, even though if it's false, there is smoke, and there's going to be somewhat of time that's going to take to get through that smoke if you're a HIMS shareholder, because the core of what HIMS has been selling to investors, or the narrative or the rhetoric, has been credibility, compliance, and like a belief that a disruption in a really awful system like healthcare is going to come at a cost of trust. And HIMS was like, you don't have to do that with us. We're going to disrupt the system, and we're going to do it at the right way. Norvo just essentially lit a match into that narrative, and they threw words like, what was it? Illegit, yeah, unsafe, deceptive, like essentially you're frauding retail. Like words you just don't throw out lightly. Like there's something that's come, like maybe it's like, oh, this is, I see the bulls out there. They're saying like, oh, like they're clearly disrupting this big pharma space. So of course, they want to sideline the young buck. But I don't know. The most powerful player in global pharma is using these, saying these slanders. And yes, it's his new CEO. So maybe the new CEO didn't like the HIMS partnership, and he just
Yeah.
want to reenact it a bit in a way that's saving face. That could be the case. Fine, I hear you, but also, I don't know. I really don't know. I get it. Novo's move could be more of a defensive strike rather than a moral one. I can see that, but I do think that there is some noise in the secular unmasking of how disruptive HIMS has been. And I think that this is a legit business, but it's one that it's so much regulatory fluency, and there's a lot of like operational discipline that you need to succeed in it. And if you just look at the sales and marketing expense on HIMS's uh, balance sheet, like it's substantially higher,
Yeah.
and that is only increase. And I just think that there's a lot of complexity and noise, and it's going to take time to phase out because trust is one thing that's a giant question mark for investors after that statement yesterday, and those are the longest to take to kind of clean up or clear up.
Yeah, I do love a corporate war of words. They pull in some very interesting language. Uh, and yeah, when I read that too, I was like, ooh, someone might get sued. But hey, we like a good fight. It's funny, I was just looking on the Stocktwits page for HIMS, and this volatility is actually like, I feel like the retail investors on Stocktwits are still very bullish. This one guy, DGen Stock or gal, said anyone who's been in the stock for over 6 months knows we have days like yesterday at least once every couple months. It's unfortunate. But one thing I do know is
Crazy.
always bounces back. So, I mean, this goes back to the thing we talk about a lot where people are just like accustomed to the volatility. And I know, Jake, on the technical side, I think I saw you share out some notes on NVO that you were
Yeah.
looking at lately. What's going on with them in particular?
Well, what's going on is I stopped out yesterday, so thank you, NVO, for I literally entered a position on Friday, and I was like, yeah. Yeah, I mean, NVO is interesting. Um, like it's kind of a gappy stock because it's, Danish, and they kind of have a market that opens in Europe. So it's kind of like gold. It's kind of gappy. So I kind of like to look at the longer term view. So this is the monthly. Is there any way that I can minimize this screen? Okay, this is probably going to be the best. Yeah, I mean, you're still kind of in this consolidation mode. You had a nice pop earlier in the month, and it did look good. I mean, you had kind of this double hammer that was forming in May and April. For now, so I've got the volume profile up, so it's measuring how much volume has occurred since the high in June last year, and you can see we did bounce exactly where you'd expect. There's a lot of volume in that general like mid 60s area, so price is able to base pretty well there. And then you can see this wick from this month. I'll kind of point it out here. You were able to move through this area pretty quickly because you just don't have a lot of liquidity up here. So price is able to move through these what I call volume gaps pretty quickly. Let's say the 24th. So like it's the 24th. So there's what, like 3 or 4 more days left on the monthly candle. I wouldn't say this is like the best looking monthly candle, and it doesn't really give me much of a tell at all here. My thought process was we would have kind of bounced hard on Monday for NVO with their news out after hours, and then of course they dropped this HIMS bomb. So I took a loss there. Wasn't definitely one of my worst losses of the year. I was trading options on it, but for now, like you do have price back at this what I call volume shelf, just the aggregation of volume down here, this area where there's a lot of volume aggregated. So price is holding up there, but just in general, some may even call this kind of a bear flaggish type setup here. So I think NVO still has a lot to kind of figure out before, the setup looks really good. So yeah, for now I'm out, and honestly, I don't really regret taking the loss there. It just seems like there's a lot of news events around that stock. And I've learned my lesson. Dealing with anything around medical or pharma, they can drop one of those bombs literally like overnight. And, I used to trade biotech all the time, and it's like, oh yeah, we're doing a huge offering, or phase 2 trials got crushed and they didn't hit their endpoints, and it's like down 30%. So from like experience, I probably should have avoided NVO just because I have gotten hit with news events like that in the past, but it is what it is. It's you lick your wounds and you move on.
Yeah.
Let's play this fun exercise where let me see what I'm seeing on the charts on HIMS. It's like Barry Bonds, Jake's Barry Bonds, and I'm the 8-year-old little leaguer.
Well, that was NVO.
No,
But,
I'm going to do
go ahead.
HIMS to pair up with NVO. See what you
Okay.
think about
Okay.
that. Let's see. Screen share.
Love it, Shy. Get in the mix.
I'm wearing multiple hats. All right, so
Yes.
I'm getting asked this a lot for HIMS, like where I'm looking to add its name. So clearly, I'm not going to zoom in too much. There's a great volume profile here on a breakout that happened in November 2022. The reason I like that, I love anchored out VWAPs. Is one of my favorite metrics to kind of use to dictate behavior characteristic of a stock. This one has been an effective one. You can see every time it's pulled back since, I don't know, 2022, like it held up here, not much here, bounced in 24. Again, it held up really well over here. So it looks like it's a respected characteristic of trade on the stock. So this is where I kind of see there isn't that much of a volume. Like right here, it could bounce here. It's a mini low volume shelf, but it looks like it's probably going to, there's a little gap here that can fill right here at $34. Now, it aligns kind of perfectly where the anchored average VWAP is that's been defending for the past 3 years. So there is a weird gap that I think there's going to be a magnet here that I'm going to look for a trade in $32 to $34 range, but this is kind of how I'm using it. I mean, it's been pretty, the 50 week is actually aligning with that too. That's interesting to see, but I mean, it looks like it's going to hit there. I'm curious what's your take on this, Jake, if there's anything I'm missing.
You nailed that. I mean, that's exactly how I use the volume profile in VWAP. And that answers a big question a lot of people, have for me, is like, how do you choose the anchor point? And you kind of nailed it. I mean, there is a way that Brian Shannon, who's kind of the godfather of the anchored VWAP, uses it. He uses a little different than I do. He does a lot more time weighted, so year to date, quarter to date, because those are essentially benchmarks for institutional guys. But I kind of use it the same way you do, where I will just anchor a VWAP and see which one has made the market the most. I would say that's pretty spot on. And there is even a gap, like an actual price gap, right at 30.70-ish. That would be quite the move down. That would almost literally erase the entire move that we had since May. But I mean, a lot of that move was a function of the NVO partnership.
Exactly. So, it went from 30 to 55 from that partnership. So theoretically, it should fill that gap if the partnership is a no-go.
Yeah, the price gap's at 30.87. I was HIMS is one that I do in the subscription, just because so many people trade it. And I was going to mention that gap, but I was like, I don't want to get too ahead of myself because that is like another 30% down. But yeah,
I mean, it's just another day like yesterday, essentially.
Yeah. Well, yeah, exactly. Well, I kind of, I have someone will ask me sometimes, well, what about the gap down here? And it's like, well, the way I look at the market is like kind of like you're hitting different increments before. You don't want to run before you walk, right? Like let's fill the first gap down at XYZ before we even think about the gap that's 30% below, because generally gaps act as pretty good resistance support zones. So, I generally try to just highlight gaps unless it's like gold, because gold has like a gap every day, but generally I'm not highlighting those gaps that are 30% plus away. But yeah, I would say HIMS definitely has potential to almost backtrack that entire move, because like you said, that whole move started. I mean, I think HIMS was up like 25% that day that the NVO came out, news came out. if I'm not mistaken. I know it was a huge day. Let's see what it was. I think
No,
it was on the
you're right, because I
tech-
think it validated that
or
Netflix
even more.
narrative of like, oh, they might be the marketplace for all the big pharma. But I mean, I think a lot of like, first off, the pounding the table like area, which like what Jake's saying, like it's not fair to say it, but I'm gonna say it. $20. Look at this freaking volume profile, 20. And it's aligning where the 200 week EMA level is. So, like, I think $20 is gonna be highly defended. I don't think it's gonna go 50% lower, but who knows with this name. Another teaching point I think I always get is like, clearly I love this. I want to anchor to this volume breakout here. It broke through the consolidated range over here in 23 and a huge volume profile. Why am I not using this? You could. I just think this one has been defended so much better, way better than this breakout over here. And I can clearly see that this is a character trait where this could just be, I don't know, a chapter, for example, of like a moment for them, but it's not really being respected on a multi-year basis because it just it's just, I don't see any kind of clear trend here for that. But this one, I really do. It just perfectly aligns. It's kind of crazy to the dots. Like
Yep.
you can make the argument that there's an algo maybe associated with it. I don't think I don't know. I'm just saying it's perfectly hugging it. And I love to see that. But yeah, this is a name that if
one
it
of the
continues,
things that I kind of, if you anchor from that point that you had, one of the things that I do is I'll throw a percent offset. So literally, I mean, it's kind of interesting to see if you use both of those together, they actually work really well. But what I'll do is I'll throw a percent offset and I'll just say, okay, well, what was kind of the average percent invalidation of that VWAP, right? So you can see there's literally three times where price did drop below it and then kind of reclaimed it. So I'll go in and I'll throw, I mean, with HIMS, who knows, that could be like a 7.5% offset. So it kind of gives you a margin of error, but it's interesting because that VWAP that you're using from further in the past is literally almost acting as that perfect percent offset. So if you did add a percent offset band to that VWAP, it would look almost exactly like that.
Oh,
that
interesting.
lower one. Yeah. Yeah. Because it's not a standard deviation. It's just a percent offset. So if I had to guess, I think it's about 7.5 from when I mapped it out. But, you know, depending on how volatile the stock is, the more cushion you're going to have to give with percent offsets because, you know, Apple's never going to have a 7.5% offset from a VWAP. Price just doesn't deviate from the mean that much. But yeah, no, I think, you know, I personally have never touched HIMS other than maybe once. I mean, it's a great stock if you are like really, really long term and you want to just sell covered calls on it because the premiums are really high. But at the same time, if you own it at 20 and you're selling covered calls and you literally go right back to your average, I'm not sure if that makes a lot of sense. But yeah, I think the wording that NVO used yesterday, and I mentioned this yesterday with some of my subscribers, is like that. Those are pretty strong words. Like using illegal and, you know, like those.
It's also a new CEO who's saying this. He does not want to stick, or he or she does not want to stick the neck out. Like that's something there's got to be something there. a little.
I mean, especially after what, like 6 weeks, 7 weeks of a partnership, and for them to do that is just, you know, if anything, the dust needs to settle before I'd even be interested.
Totally.
Yeah. When you guys think about something like a HIMS, I know, Jake, you mentioned biotech, a totally different beast. HIMS is not a biotech, but it's intrinsically tied to that space. So like from a business model standpoint, what's like the comp for them? What category would you place them in alongside other stocks? Because it seems like they react with biotech, but they're not.
I would just say it's a SaaS company. You know.
Yep.
I mean,
subscriptions.
Like that's a subscription company. I mean, they could technically sell anything. You know, I guess, you know, SaaS is mainly attributed to software, but like in general, it's pretty much just a subscription company. They could probably go out and start selling Dose, you know, that little
the weed pen?
No, Dose. They've got like, they sell like different, it's like very concentrated, like juicing stuff.
Oh,
like,
well, I was way off.
it's like all over. It's like all over like Instagram and stuff. But it's just like a little shot every morning of just like very concentrated like
Yeah.
nutritional stuff.
Oh, interesting.
So like, I mean, I think it's broader than just selling drugs. I think, they could probably get into that space too. But I think the biggest risk is what if something they're selling does have huge side effects, or
Yeah.
there's, some, research that comes out that this creates long-term effects of XYZ. They definitely still have exposure to that, even though they're not, the creator, they're selling it, and that could completely like take a product that they're selling off the shelf if it's like a pretty big selling product.
Yeah, I mean, these biotechs are nuts. I saw Compass Pathways yesterday, a headline. They do psilocybin. One of their main drugs made it to a stage 3 trial, and the stock still dropped like 40% because people were like, I don't think it works enough. So it's like you
Yeah.
just don't know
Well,
reacting to those headlines.
well, yeah, and I mean, it's the market's about expectations. If the market has, XYZ efficacy rate, priced in, and then it doesn't hit that, even though it still hits, milestones that maybe, would have been considered a success in the study, but then the market's pricing in better metrics from that study, that can totally create a sell. It's no different than if a stock moves up really strong into earnings and the earnings are great, but they weren't, if those earnings were already priced in, then the stock's generally going to sell off.
Jesus, HIMS is red right now. It's crazy. They are just selling this name. It got that's crazy. Usually on the 30, like I'm looking at the market just open. Risk on is very on today. HIMS just feeded that move within a couple minutes. I think this is a name that's might go lower in the near term. Like what Jake was saying, like it's you have to wait to the dust. There's a 3-day rule. Like everyone knows this 3-day rule. If you don't, definitely live by it. If you're green in the market, where when there's a massive move, catalytic move, which yesterday it was for HIMS, that was a catalytic move on Big Pharma partnership saying you are a liar. That's essentially TLDR of that. You have to wait 3 days to see how the stock reacts to that. And right now it's looking like it wants to go lower. And it's tough to catch a falling knife, especially when the stock, even after yesterday, it was up 80% in 2025. Like this is a stock that just ran, and it could on a narrative, and a new narrative can pull it back just as aggressively, unfortunately.
It is interesting to look at just resiliency of the market overall, given markets don't like uncertainty. We don't know, is like to the original point when we started the show, is there a ceasefire? Is there not a ceasefire? He said, she said, what's going on? And we're up 200 points in the Dow. S&P's up, we're in the green, shaking it off. So interesting to see what that looks like. We have some earnings coming up this week I want to ask you guys about. First being FedEx. Before I get into that, I want to ask if you guys heard about this lore of the FedEx founder who recently passed away. I was not familiar with his game. His name's Fred Smith, but apparently, early in the company's trajectory, they were basically down to nothing, and he took the last $5,000 he had, went to Vegas, hit the blackjack table, turned it into 27K, saved the company. I'm like, this guy's a baller. Like you can't teach that in business school. Fast. I don't know if you guys saw that, but I was like, damn, that is like that needs to be a movie.
That's impressive.
Yeah. Well, FedEx is also reporting earnings this week, and that's obviously a signal of what's going on, consumer, business, shipping, all the things. Either you have thoughts on that, either from a fundamental signal standpoint of like state of the economy, Shy, or Jake, is that one you're tracking at all? If not, we can keep rolling.
FedEx?
I'm putting you on the spot.
Talking about FedEx?
Yeah.
Not one I really track. It's one of those ones that I think, is going to be so the war news, who knows? It seems maybe it's going to be over. Literally,
The
who knows?
market
But
thinks so.
yeah, market thinks so. But now, tariff deadline is what, the 9th or something like that.
Yeah.
So, does that take over, and how does that affect things? So, if that does affect things, it could affect shipping and, people ordering stuff from overseas, all that. So yeah, hard to say. I don't track it that much. I don't have much of an opinion other than the tariffs could come into play.
Yeah. I really
I
just
mean-
wanted an excuse to bring that anecdote up. Really, that was my entire goal there.
I mean, we can talk about it. I mean, listen, Amazon just announced today they're spending $4 billion to expand their same day delivery towards rural parts of US. Like, so people in Iowa and on their farms can get stuff the same day as someone who lives
That's wild.
like in LA, like me. How, if you're FedEx or UPS, how do you compete with that?
How are they
you just
doing
don't.
that?
Just the logistics. They all they do is invest every single year on these like warehouses, like making these fulfillment centers that they're becoming. It's like the Starbucks. Like Starbucks literally was on every corner, every couple blocks,
Yeah.
everywhere. They're doing the same thing for the fulfillment centers. And the thing about those is like it's a one-time capex. Then you have to do maintenance. But once you scale up, which they've been doing this for the past decade, like you're everywhere. And now all of a sudden, this is before like physical AI is really a thing, guys. Like this is before drones or autonomy delivery drivers like are a thing where that's going to even accelerate the process even more. So it's just everyone's like viewing Amazon with their current margins right now, especially on the e-commerce side of the business, and it's just so short-sighted. Like it's going to expand to like the mid-teens next couple years, and they have so much. The defensibility of their logistic network is unmatched, and I think that FedEx and UPS, all you can do is partner up with them. That's all you can do.
Yeah. Let's take a hard right to ONDS. I feel like we always do it. There's never like sometimes there's a nice transition, and sometimes it's like
You should do like this
yeah. Sometimes I try to like sometimes I do like a play on words or something, but I'm like you're talking, I'm like there's no way I'm gonna pull this off. We're going from shipping to drones.
Well, no, you could have done like, oh, speaking about drones for Amazon, let's talk ONDS.
Yeah. Oh, there you
Look
go.
at that.
I'll do it again. You would think, Shay, that drones would be the solution moving forward. And speaking of drones, let's talk about ONDS. Jake, I know this is one you brought up last time. Shay, I also want to get your thoughts from the defense thematic point of view. But Jake, we've seen anything interesting there since we last spoke to you? Still tracking that one?
Yeah. I mean, I have a pretty huge position, and the reason I do is because essentially, let me pull up the chart here. And when I pull up the chart, can you see that the little screen that pops up like that? This, I guess you're in the bottom left corner, or no?
No.
Oh, you
It's
can't.
a clean view.
Oh, okay. Because I was thinking, I was like, oh, well, half my chart's taken up because.
No.
Okay. Yeah. So I have Pepsi up right now. I actually just took a position in Pepsi.
Let's start there.
Yeah. So literally, that's why I was like looking at my phone as you guys are talking because I'm trying to enter that. Yeah. I just took Pepsi. I took a pretty big position in it. I bought the September 140 calls. Simply because they have earnings coming up, and generally when you have this type of price action that's flat, at least I don't know if I'd hold Pepsi through earnings, but what happens is, I think the earnings are on the 14th or something, or one of those days. That's not a Sunday or a Saturday in mid-July. Generally what you'll have is you'll have pretty much most of the contracts start increasing in expiration, increasing in implied volatility because the market's just anticipating a move. So this is one that I traded a couple weeks ago. It was still pretty range bound. It still is, but I do think we're finally probably pretty close to getting a move. I think we talked about the mean reversion type move back with Google maybe a few weeks ago when I mentioned, hey, the only reason I'm buying Google is for literally price to revert back. So I'm using the anchored VWAP here for Pepsi. It's the pivot from April 4th. And essentially you have this VWAP that initially acted as resistance a couple times back in April. And then you haven't really had that mean reversion move back to, in this case, the VWAP is now right at 134.38. So that's a decent move for Pepsi. So if it made that move, a lot of the time you'll get anticipatory buying into an earnings event. So I mean, if Pepsi could move up towards that VWAP around 134, as I mentioned, it's at 134.38. That'd be a pretty decent move for Pepsi. So that is one I'm definitely keeping an eye on. Then I did just start a position. And then ONDS is one that I do have quite a big position in, simply because one, I believe in the drone sector story in the long term. And so what I do is I just have a large position and then I just trade around a core position. So a lot of people do that, right? They'll buy, depending on what size, let's say 100,000 shares. Somebody buys 100,000 shares, and then maybe they have a core position of 50,000, right? So they always want to hold 50,000, but then let's say the ONDS pops to 180, they'll sell, maybe 50,000 shares, keep the core position, and sell covered calls or something. So, so that's kind of what I've been doing. I do have covered calls on this as well. So as I was saying before, I would prefer it stay below $2 by the time July rolls around, so I don't get called on a decent amount of my position. But even if that does happen, it will be enough profit where I'm not going to be too concerned. But yeah, ONDS pretty much same thing, right? We pulled back, we mean reverted right back where this arrow is yesterday to that January 2025 pivot VWAP. This is about as textbook as it gets. You break out. We broke out through it in early June. We moved up almost to my target zone, which was the February pivot zone from 215 to 225. And then we just simply pulled back to retest that VWAP, which is almost always going to be the default assumption. So anytime you get a breakout, whether it's through a VWAP, whether it's through just a horizontal zone, whether it's through a moving average, the assumption is that you're going to pull back and at least test that area that broke out. Now, a VWAP is a little more fluid, so it's not static, right? So it's a function of time. So if we broke out and pulled back a few days later, that VWAP was around 132, 133. Now it's at 138 because you've had a lot of price and volume happen above that VWAP. So it's an average. So if there's more price and volume happening above that line, it's going to continue to move up. No different than a moving average. So yeah, that's definitely one that I'm keeping an eye on. As I mentioned, they have like a virtual investor day, I think sometime in the second week of July. So that will be interesting to see if they come out with anything new. But yeah, in general, I just like it. It's a classic breakout, pullback, and then possible continuation up. You've got kind of I don't want to call it a bull flag, but almost kind of like a pennant here. So if we're just going to do a little Bob Ross action here and draw, so you pretty much got
this software kind of looks like Microsoft Paint back in the day.
I literally started with that.
No way.
Yeah, I mean, I didn't really know what TradingView was, and then some guys like, you got to try TradingView, but I was literally I was like taking a screenshot of my chart from like Scott Trade back when that was the thing, and then putting it into like Paint and doing it that way.
Oh my god.
So yeah, I mean but yeah,
We've come so far.
You've got a breakout, you've kind of got this falling wedge forming, and then the assumption is that would break to the upside. So we'll see what happens there. I don't have any plans on selling at least the core position. The position outside of what's not covered by the covered calls. I may take profit if we get closer to that $2 level again, but for the most part, this is definitely one that has done very well because I initially was loading up, in the 80s and 90s. So my average was right around $1. It spiked to like 160, 170. I sold a decent amount, and then just have kind of been refilling the bucket, on pops and drops. So, but yeah, that's the main drone name I'm going to focus on.
Right.
That's my exposure to the sector.
Yeah, and Shay, this one's not in your portfolio, but is there a company that is in your portfolio that's sort of similar? Is this similar to an
No,
Archer?
I like ONDS. I like their
Yeah.
tech. It's just management, corporate governance issues on my end. I've followed them for a while, so which is also normal for a small cap name like ONDS. Like they're not supposed to be like cream of the crop. Let's just say that at that size. So it's just something I'm monitoring, watching. Their competitors RCAT really in that space from the public market. So RCAT issue is like there's some China fuckery a bit with that name, but it's just it's tough. Like drones is such an early innings industry. It's so early that I'm poking holes in something that just
Yeah.
maybe it's just part of the game as a secular growth theme that is just getting get started. Like, but yeah, something I'm monitoring, and this is a name that if it works, like it's a $10 stock on us. Like if it actually succeeds in what they do, like what the management's saying, and they deliver it, 2 or 3 years, it's going to be substantially higher. Just say that. So I am watching that name for sure.
I was curious, Shy, because we've been talking a lot about drones. Is there like a value chain associated with drones? So other industries that would move as drones become more commonplace and scale out? Or is it one of those things that's kind of more independent?
No, I mean for sure. First off, I think policing is going to drastically change,
Yeah.
unfortunately for us. But it's
Well, everyone's gonna
fortunate.
be wearing the meta glasses anyway. We're all gonna be narking each other out, so we don't even need drones.
Well, yeah, I mean, and I think e-commerce is going to drastically change for sure. I
Yeah.
think that industry, policing, so Axon for policing, I think will really help accelerate their adoption. They don't need any help; they're killing it. Others, yeah, I mean, a lot of the way I think about disruption is like for autonomy or physical AI. A lot of people don't realize the John Deere's of the world, they're going to benefit substantially. Where they're been fixed at a low margin business for a long time, essential but low margin. This is a margin expansion opportunity they haven't had the luxury of for a while. So like you have to think about those like these disruptive technology. What's a dinosaur industry that's essential for every day, but just haven't had no chance for margin expansion? That's what we have to think about. So like I'm sure for drones, like I'm blanking on around. I'm oil and gas. Like that's a no
Yeah.
brainer for me because for those drilling sites, like the red tape bureaucracy, I think can get accelerated if there's constant monitoring that the government can see via drones, for example. Like that's same with gold. Like maybe gold's a different story on that too. Stuff like that.
Yeah. I mean, the John Deere drone sounds sick. I hope somebody is working on that. Guys, we got to wrap it up soon, but want to ask you each a rapid fire. We're 2 days into the week. Well, actually 1 day and a little bit into the week. Anything that popped on your radar that's new or interesting this week? Could be a ticker or a company, a headline, something that's upcoming that you're watching. What's something that's spiking your interest amid all of the digital deluge? I'll start with you, Shy.
Great question. I think for me specifically, new age defense, that's been a really strong bucket the past month or two. I want to see as things de-escalate how those names react, how much positioning there was into the defense safety net. Right now, CrowdStrike's down 1%, Axon's down 3%, Rubrik's red, like Palantir's red. Like it's showing me like, oh, okay, so I was right on my thesis that that's a safety blanket, but now things are de-escalating. I could see the VIX maybe returning towards a mean of 15 or 16. That's where like, okay, maybe that's that section what gets sold off and the risk on will be there. Like small cap summer might be a thing. We'll see. But like I'm watching the VIX. Long-winded answer, the VIX. 20 yesterday, hit an 18 handle this morning. I could see continued drainage, especially in the summer months, towards the mean of 15. So something to monitor.
Damn, small cap summer. Let's put that on a bucket hat. I need it. Jake, over to you. What's something that's sparking your interest over there?
Well, I mean, he kind of nailed it on the head with me as well. I think last week we discussed IWM. I kind of mentioned you had this volume shelf set up, and we had a volume gap above. So I do think small caps are probably going to catch a bid here. They already are, and they're lagging the overall markets. So generally, there are different types of investors, traders. Some people just love buying all-time highs. Some people like to play the laggards. I generally like to play a laggard. And I think I kind of mentioned why a couple shows ago, but essentially, if I'm following a laggard, I already know what the leader's done. So the laggard generally follows. And so yeah, with small caps, this is the weekly candle. So I highly doubt we move through this entire volume gap within a week. But yeah, that 220 to pretty much I would say anywhere from around 220 all the way up to around 224 is very possible for small caps. We are starting to enter a very strong seasonal time of the year as well. 4th of July week and around that time is generally just a time where you have low volume kind of melting up of the market. So that's definitely one I'm paying attention to. I'm going to play it, through ONDS because that's a small cap. It's pretty much done exactly what it needed to do. Broke out of the VWAP, pulled back, retested it. So my proxy for small caps will be my ONDS position. And then, like I said, I mean, I just entered Pepsi, so that has been a name I've been watching and trading, and with it not moving that much with the market quite yet, and it still being range bound into earnings in 2 or 3 weeks, I do like the potential of a possible anticipatory buying event there as people buy into earnings. They do have a pretty strong relationship with Celsius. Celsius is a pretty hot topic and drink right now. They're a big distributor for Celsius. So I just like the fact that Pepsi has been so range bound and it has pulled back quite a bit that I do think you're going to get a little bit of a reversion to at least that VWAP from April 4th. And that's right around 134.30 or so.
Love it. We'll, of course, be waiting the FedEx earnings, readout Carnival, Fizz, which is National Beverage Corp. That's the LaCroix parent company. I follow them personally because they've been known to have some very unhinged press releases. In the past, the CEO has written them himself, which is so funny. I think they're on Thursday, so we'll see what's going on in the Seltzer Wars. Jake, thank you so much for stopping by. Sharing your insights. I'm sure you'll be back very, very soon. Shay, thank you as well. And we'll see everybody bright and early tomorrow morning.
Awesome. Thank you, guys.
See you guys.